Who said mid-cap stocks can't make any returns in a bear market? Holy banana bread, let's do this. A mid-cap company is one of those companies with a market cap between $2 and $10 billion. They often do not have the same deep pockets as the large cap companies to help them weather rougher economic times. However, some of them do just fine, and in some cases, a few of them are absolutely moving in the right direction, at least in regard to returns. Before we do some mid-size staking, tell me in the comments if you take market cap into consideration when you are choosing a stock. I am always grateful when you drop in on the home of free financial content on YouTube. While you are here, please subscribe as you don't want to miss a single moment, and a huge thank you for that click. We have seen some of these stocks before, but there are also a few that are brand new to the channel. This is very exciting. The qualifications for today's list is pretty simple. Have a market cap between $2 and $10 billion and have a total return in the positive for this year and last year. We didn't have as many mid-cap companies to choose from, but I did manage to scrape together 7 good ones for you. Now, just in case you're asking that question, well, why even go with a mid-cap when there's a lot of wonderful large caps? Well, the lower the cap, the higher the potential for some greater returns. So that is one of those factors that some investors really like to take into consideration, especially if they're hoping for some of them massive returns. So without any further ado, let's do this. So kicking off our list, we have Rogers Communications with a ticker of RCI.A. They are based out of Toronto, Ontario, and they are one of our big 3 cellular internet and TV providers. They have service from coast to coast and look to solidify their Western presence with an acquisition of Shaw Communications. Now, that is still under debate by the Competition Bureau, and there could be issues with it going through, so don't count it as a done deal just yet. They have a market cap of $6.81 billion. Now, I'm going to tell you right up front, this one is a cheat in a way. Because if you look at all of their different share classes, they do have a total market cap closer to $30 billion. They have a very respectable beta of 0.40. Their earnings per share comes in at 3.08, and they have a price to earnings share of 19.97. Their debt to equity ratio comes in at a whopping 385.65%. This is way, did I say way? Higher than I can be comfortable with. Their dividend yield comes in at 3.252%, which is paid out quarterly in the amount of 50 cents per share. Let's look at their growth. In 2021, they entered the year at $60.06 and finished it at $62.47 for a return of investment of 4.01%. Adding in the dividend, the total return for 2021 is 7.26%. In 2022, their share actually did falter a wee bit, and it is at the time of recording $61.50. This is an ROI of negative 1.55%. Wait a minute, I thought you said there would be no negatives. Well, technically there isn't, because we're looking at their total return, and when you factor in the dividends, it squeaks in at 1.70%. This is a stock I will personally never ever buy, as I am biased against Rogers. I do not like them at all. However, from an unbiased view, I would also not buy them based on their debt alone. This is just not a company I feel that is poised to do great things in the near term. Maybe once the Shaw deal is behind them, they can work on that debt. But for now, this one, in my opinion, is just a stinker. Up next in our number 6 slot, we have IA Financial Corp with a ticker of IAG. They are based out of Quebec City, Quebec, and they are one of Canada's largest insurance and wealth management companies. They have a market cap of $7.85 billion and a beta of 1.33. Their earnings per share comes in at 7.42. They have a price to earnings ratio of 10.04. Their debt to equity ratio comes in at 45.91. Their dividend yield comes in at 3.623%, which is paid out quarterly in the amount of 67.5 cents per share. Let's look at their growth. In 2021, they entered the year at $53.95 and finished it at $72.82 for a return of investment of 34.98%. Adding in the dividends, the total return for 2021 is 38.60%. In 2022, their share rose a wee bit, and it is at the time of recording $74.52. This is an ROI of 2.33% and a total return in 2022 of 5.95%. They have done worse in the bear market, but a positive return is still pretty awesome compared to most of, well, the rest of the market. Moving to our number 5 spot, we have TMX Group with a ticker of X. They are based out of Toronto, Ontario, and they operate, well, financial markets like the TSX in all of its different flavors, as well as the Montreal Exchange, Canadian Derivatives Clearing Corporation, Trayport, and Canadian Depository for Securities. They have a market cap of $7.66 billion and a beta of 0.57. Their earnings per share come in at 9.42. They have a price to earnings ratio of 14.63. Their debt to equity ratio comes in at 27.21%. Not too shabby. Their dividend yield comes in at 2.409%, which is paid out quarterly in the amount of 83 cents per share. Let's look at their growth. In 2021, they entered the year at $125.83 and finished it at $128.53 for a return of investment of 2.15%. Adding in the dividend, the total return for 2021 is 4.56%. In 2022, their share price rose and at the time of recording was $137.81. This is an ROI of 7.22% and a total return in 2022 of 9.63%. As investors, we may all just have to love this company. I definitely use them every day, and they are also one of the websites I utilized for some of my data. Coming in at number 4, we have Element Fleet Management Corp with a ticker of EFN. They are based out of Toronto, Ontario, and they are a fleet management company providing management and financing for commercial vehicles and fleets. They have a market cap of $7.49 billion and a beta of 0.95. Their earnings per share comes in at 0.91. They have a price to earnings ratio of 220.93. Their debt to equity ratio comes in at 241.50. Yikes, that is still much higher than I like to see. Their dividend yield comes in at 1.627%, which is paid out quarterly in the amount of 7.7 cents per share. Let's look at their growth. In 2021, they entered the year at $12.91 and finished it at $13.19 for a return of investment of 2.17%. Adding in the dividend, the total return for 2021 is 3.80%. Now, in 2022, their share rose a little bit more, and at the time of recording, they're coming in at $19.05. This is an ROI of 44.43% and a total return in 2022 of 46.06%. There will be a continued demand for commercial fleet services, so they should do well. Just pay some of that debt, folks. Coming in at number 3, we have Baytex Energy Corp with a ticker of BTE. They are based out of Calgary, Alberta, and they are a company that is engaged in the oil sector with the acquisition, development, and production of crude oil and natural gas. They have a market cap of $3.72 billion and a pretty volatile beta of 3.14. Their earnings per share come in at 1.88. They have a price to earnings ratio of 3.62. Their debt to equity ratio comes in at 40.18%. They do not have a dividend. Let's look at their growth. In 2021, they entered the year at 61 cents and finished it at $3.98 for a return of investment of 476.81%. Holy friggin' banana bread! In 2022, their share rose a bunch more, and at the time of recording is listed at $6.81. This is an ROI of 71.12%. This is a company that only recently was a penny stock, and with the oil boom have grown to some significance. They do have a lot of volatility, which is why it is often a favorite stock for Canadian day traders. Our runner-up this week is Enerplus Corporation with a ticker of ERF. They are based out of Calgary, Alberta, and they are one of Canada's largest independent oil and gas producers. They have a market cap of $5.53 billion and a volatile beta of 3.01. Their earnings per share comes in at 4.11. They have a price to earnings ratio of 6. Their debt to equity ratio comes in at a respectable 49.52%. Their dividend yield comes in at 1.218%, which is paid out quarterly in the amount of 7.5 cents per share. Let's look at their growth. In 2021, they entered the year at $3.97 and finished it at $13.70 for a return of investment of 245.09%. Adding in the dividend, the total return for 2021 is 246.31%. In 2022, their share continued to rise and at the time of recording was listed at $24.64. This is an ROI of 79.85%, and adding in that dividend, we get a total return of 81.07%. Not too shabby. It is absolutely no surprise that oil and gas have done well in this list. And this is another company that will continue to have amazing results as long as oil continues to boom. Our top spot this week is Turquoise Hill Resources Limited with a ticker of TRQ. They are based out of Montreal, Quebec, and they are a mineral exploration and development company. They are a major player with gold, silver, and copper. They have a market cap of $8.54 billion and a slightly volatile beta of 1.55. Their earnings per share come in at 3.57. They have a price to earnings ratio of 11.88. Their debt to equity ratio comes in at, once again, respectable 42.72. They do not have any dividends. But let's look at their growth. In 2021, they entered the year at $16.09 and finished it at $21.14 for a return of investment of 31.39%. In 2022, their share rose and at the time of recording was listed at $42.42. This is an ROI of 100.66%. Holy banana bread. We can definitely see why they finished in the top spot. Resources is a sector to watch in 2023, and this is one of the companies you may just want to pay attention to. Once again, we're seeing that there is money to be made in the bear market, even with the mid-cap companies. These are some good picks, and if you like any of these stocks, be sure to do your own due diligence before you jump in. The fun does not have to end here. Check out my video on Japan's bubble that I will link on the left. Otherwise, check out the video on the right that YouTube thinks you will like. Your click will decide who is right, and I will see you in the next video.